In the last week, and only in 1 week, my portfolio went down 14%, which hurts a lot because I'm more into like long-term investing. And when you see a minus 14% in just 1 week, it just reminds me of this one time. So what the hell is happening in the market right now? Why are we seeing red days and red days every single day? And how can you actually move in this market to make money? So we're gonna go through why is the market selling off in the latest week or so. My first thought is that people are panicking because when prices are going down, people want to take profit and run away with it. That's most likely what is happening right now. People are seeing prices going down and they are panic selling. That's a fair thing to do if you are new to the market. If you are not new to the market, holding is definitely a better option and buying the dip is even better. But that doesn't really explain why the market is going down in the first place because well, for people to panic sell, the market must already be going down. So that just increases the speed of the market going down, but that's not explaining why it started going down. So the first thing that I thought about while looking at it was that overvaluation is everywhere in the market right now, especially in tech sector stocks, especially in really hype stocks. And as we saw with the latest month, the market is going crazy over hype, and that's not something you want to see. And hype is fun and all, but over the long term is really unsustainable. And if we see more of these stocks going parabolic overnight, that's a bad sign for the market. It is getting more and more frequent to see these spikes going crazy or to see these little stocks that nobody knows about going like 200% in just a few hours, and that's not something you want to see. You don't want to be playing in the stock market with hype stocks, except if that's really what you want to do, but most likely you're going to lose money at some point, and a lot of money. And what I mean by overvaluation is that if you look at the PE ratios of pretty much any big companies right now in the market, for example Microsoft, Apple, all these big tech sector companies, for example, you can see that the PE ratios are really high, and that's not something really you want to see in the market because most of the time it means that the prices are getting more and more expensive without having the company behind that's following with the earnings and revenues and all that stuff. That's not really something you want to see in the market for the long term. So maybe having a correction right now in the market is not that bad, and would you guys consider what is going on right now a correction or the start of a market crash? Let me know in the comments down below. Another thing that I looked at that was really interesting to me was the Volatility Index, which pretty much represents how fearful are people in the market, how many of them are actually selling all their stocks. And you can see that over the last few days it's actually going up quite a bit, but don't worry too much, it's not really a representation of a market crash going on. No, if you look at this, yeah, okay, that is the COVID 1 year ago, and you can see that the Volatility Index was going through the roof. So really where we are right now is really not that big. So maybe we're just into a correction, which will be the best scenario for most people and for the market overall. But you know, I think also that what is going on is that people are starting to understand that what we are going through with the pandemic and the economy going down and stimulus bills not coming, all that stuff, we already know it, right? Isn't as good as we thought it was. Because if you compare the economy before COVID to right now, it might seem we're doing pretty well, right? Because we had such a quick recovery, at least in the stock market. But remember that the stock market isn't the economy. But what we're seeing right now with the stock market going all-time highs all the time, but the economy is still behind and by quite a bit. But maybe people are just starting to realize that what the stock market is doing isn't what the economy is doing. And it's possible that people are starting to get scared of that, and I would completely understand, because if the economy is not doing great and we see this money printer going brrr every single day for the next months to come, we're gonna see some big inflation coming up in the future. But of course, inflation is something that we need if we want to keep a healthy economy, which we're not seeing right now. Rates are at 0% and the Feds are not planning on adding inflation, at least for quite some months. And I believe people are scared of seeing huge inflation in the future with prices of goods going up like crazy and your money going down like crazy. That's a possibility. The US dollar actually lost about 8% in the last year, which is big. That's a big percentage of the value of the dollar that is going down. And also something I figured was interesting about the whole situation is that if you look over the last year, it might seem like the stock market is doing really good. But actually that's not really the case. Tech sector is doing really good because of the pandemic. Work at home stocks are doing great, EVs are going great, but because of the hype mostly, and also because of Biden administration, but that's not the thing of this video. If you look at all the other sectors, it's red. It hasn't recovered yet, and even if the big tech sector stocks are up like crazy. A lot of companies are still in the red since the start of the pandemic. And actually, fun fact, which I don't know if it's really fun, but over the last year, did you know that only 2 indexes are in the green? The S&P 500 and the Nasdaq. That's the only 2 indexes you can see that year over year are in the green. Every single market index, on the other hand, is still in the red. And as you maybe know, the S&P 500 and the Nasdaq are both made out of these big tech sector stocks that are driving the stock price up. On the other hand, if you look, for example, at the Dow Jones or, for example, the Hong Kong Stock Exchange is down 14% year over year. They have not been recovering. They are like half of the way there, and that's not enough. And my light just turned off, but that's fine. We're still gonna continue. So maybe people are just realizing that what is going on in the market is not what the economy is doing, and that maybe sometime in the future the market is gonna have to go down in order to come back to what the economy is doing. So what should you do to make some money? What I would recommend to anyone is to hold your stocks. If you have stocks right now that are going down, don't panic sell them. Hold them as long as you can, and if you can, just buy more of these shares, buy the dip like we like to say. So really keep calm, relax. If you see that you're losing percentages, call somebody, have fun with them, go do some sport outside, and just don't think about it too much. Really, you're gonna thank me over the long term, because if you sell right now, I can guarantee you that you're almost gonna sell every single time at a loss. So buy low, sell high. I'm gonna see you guys in the next videos, and you can go and watch these two right here. Thank you for watching, and I see you guys the next time. Bye bye.